Ladies and gentlemen, good day and welcome to the Carysil Limited Q1FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. I now hand the conference over to Mr. Chirag Parekh, Chairman and Managing Director of Carysil Limited. Thank you, and over to you, sir.
Thank you. Good evening, ladies and gentlemen. Thank you for joining the Carysil Limited Q1FY26 earnings conference call. I trust you had an opportunity to review our financial results investor presentation, both available on the company's website and stock exchanges. Joining me on this call is Mr. Anand Sharma, Executive Director and Group CFO and SGA, Investor Relations Advisors. Carysil delivered a resilient performance Q1 FY26, driven by strong demand momentum and repeat orders from the customers. Our diverse customer base, strong channel partnerships, strategic capacity expansions position well to meet this growing demand while enhancing operational leverage and profitability. Quartz Kitchen Sink segment. Our Quartz segment delivered a strong performance in Q1 FY26, with volume rising by 22% YOY to 1.89 lakh units. Capacity utilization during the quarter reached 75%, reflecting healthy throughput while retaining sufficient headroom to accommodate additional volumes. As expansion progresses, in spite of global challenges, Carysil has emerged as a preferred global supplier thanks to our resilient, adaptive business model of high-quality products, competitive pricing, and customer-centric approach. During this period, we successfully secured a lot of new contracts and strengthened relationships with current customers. Our relationship with IKEA began in 2020, and over the past 5 years, we have not just expanded our business here, but also earned their trust as a reliable global supply chain partner through our consistent focus, quality, and reliability. Aligned with our strategy to strengthen global partnerships, we participated in IKEA's global RFQ, non-US business, and successfully secured a significant order, which would increase our wallet share to 75% of our market share. We have entered into a purchase agreement with investing approximately 20 crores in mold machinery and infrastructure to cater IKEA's global non-US requirement of Quartz Kitchen Sinks. We are in the process of ordering the mold machinery, and full volume expected to commence from as early as Q3 FY26. We are pleased to inform you that our supply to Iran or US retail has commenced, with our products now displayed over more than 1,800 stores at Lowe's Incorporation. The orders from the retail giant have exceeded our initial expectation. Partnership with global giants from backbone is our success. We believe that strong collaborations ignite possibilities, create a positive momentum, and push the boundaries of innovative and excellence. Leveraging these partnerships, Carysil delivered a resilient performance Q1 FY26. The strong demand momentum is evident by repeat customer requests of higher volumes. Our diverse customer base and supply targeted capacity expansions confidence the customer to provide sustainable supply to meet their growing demand. We emphasize that the market share globally of Quartz sink is growing rapidly, and hence we have the traction and the momentum of business globally. From every corner of the world, we have a strong demand of Quartz Kitchen Sinks. The capacity utilization of Quartz Kitchen brands has increased already to 75% in Q1 FY26 and is expected to further improve quite rapidly in the coming quarters. The global economy remains highly volatile due to ongoing tariff and trade disruptions. One of the most significant events today is repositioning of global trade and supply chain led by recent US tariffs. In light of the above, the evolving geopolitical environment, we are proactively engaging with our customers to provide the necessary support and strengthen the business relationship further. We are closely monitoring emerging developments and take all the necessary steps to de-risk our business and recent tariff hike to keep our business and customers intact. In the present 25% tariff situation, we are still better priced than most of our competition, which are from Germany and Canada, which they have already 15% tariff and higher inflation cost at their respective countries. As stated earlier, we have a great cost advantage over the European competition, which can absorb this 10% tariff differentiation. Canada is also slapped with 35% tariff, which is much higher than India. Since the steel sinks import into United States attract 50% tariff already, the traction of port sink has provided impetus growth in the U.S. market despite of tariff rate increase of port sink. With current traction and demand and opportunities of the non-U.S. market, we are quite confident that the capacity utilization will reach to 90-95% in the coming quarter. Stainless steel kitchen sink segment. We also have some very exciting news on the stainless steel segment also. Our stainless steel segment is also progressing very well. With Q1FY26, capacity utilization reached 95%. As communicated in our last earnings call, we entered into the OEM business with global brands to manufacture stainless steel sinks for their Indian requirements, and the relation can extend to the global requirement also. This is the first time Carysil has now ventured into the OEM supplies in India. This is a strong endorsement of our quality standards, manufacturing capabilities, and customer confidence. To meet the growing demand, we have already started expanding our capacity of the additional 70,000 units. With this expansion, the total capacity will increase to 2.5 lakh units. We expect the new capacity to be operational from Q4 FY26. Furthermore, we have participated in a large, about 500,000 sink RFQ for a major retail giant of the world. And if we are able to win this award, it can substantially increase the volume of stainless steel sink segment. Due to our bottlenecks in the capacity, we have to immediately create a capacity of at least 250,000 sinks of stainless steel sinks. Hence, we have channelized resources of 10 crore capital via right issue, which is underway. The total capex could be around 30 crores for the new stainless steel sink expansion. Appliances and faucet segments. We are ready for the next growth phase now, assembling and manufacturing. As mentioned, we successfully commenced in-house assembling manufacturing of kitchen hoods, and we focus on assembling and manufacturing hobs, microwave ovens, food waste dishwashers very soon to give volume enhanced value addition. As we all know, there's a BIS certification is in place, and the company is in plan to put up some very strong capex investment to get the plan up and running by end of quarter 4 FY26, which we will come with the news shortly. We have significantly also enhanced our assembling of kitchen faucets and manufacturing of stainless steel part of kitchen faucets to increase over 50,000 in a year. We are, due to our penetration in large retail giants, there has now been traction also to source kitchen faucets from us, due to which we are now working right now we are in advanced talks with a major European faucet player to have a technology transfer. We are continuously working to achieve self-reliance and significantly improve lead times elevate product quality and contribute to healthier margins. We will continue our pursuit of innovation and global competitiveness by exploring the latest manufacturing process technologies to produce highest quality to cater global customers. Our overseas subsidiaries starts with UK. Our subsidiary of UK, in spite of muted economy, has delivered consistent performance of Carysil products, and Carysil Surface Limited are performing well. We expect this positive trend to continue due to our hard work and undedicated effort by our UK team. We have been constantly, quarter on quarter, adding multiple customers in UK. Our partnership with Howdens, which is the largest kitchen manufacturer in UK, have once again shown a very strong performance and will continue to do so. Our US subsidiary, United Grand LLC, has performed much better in current quarters compared to previous financial year despite muted local demand, focusing on more value-added jobs and new customers. In the past year, we undertook a comprehensive cost structure optimization and undertook changes in sourcing from local US suppliers and other European suppliers. The subsidiary reported EBITDA of 1.2 crore. Q1FY26 EBITDA rose sharply to 1.8 crore compared to 0.4 crore in Q1FY25. The PAT level has also losses have reduced from 2.2 to 0.8. With sustained operating discipline and focus on better sourcing margin expansion, we are confident to having a turnaround this year. UAE. Our UAE region has continued to perform well, with approximately 80% of our business driven by appliances segment. Our category were demonstrated strong product fit and channel penetration. Encouraged by this performance, we have planned measure expansion across GCC markets to capitalize on appliances growth and leverage established trade relay in the region. We are now planning to open the second showroom in Dubai for about 7,000 square feet. We are also opening a new showroom in Muscat of about 5,000 square feet to enhance our presence in the Gulf region. Domestic business. India's youthful evolving customer base is shaping new trend aesthetics and functionality. The increasing demand of premium and high quality products seamlessly blend luxury practically presents a significant growth opportunity for Carysil. Our domestic business continues to grow in spite of the challenging environment. We have taken various measures to improve our market penetration through opening of new galleries, onboarding new distributors, increased display point, and enhancing marketing campaign of premium product line. We have recently appointed Mr. Pawan Kumar Palkar, our Chief Sales Officer for our domestic business, to accelerate the market expansion and deeper penetration. With around 2 decades of extended experience in sales, e-com, business development, and P&L management, Mr. Palkar will provide strategic direction to enhance brand visibility and sales growth. We also hired Deloitte team to formulate a robust plan to expand our domestic business to 500 crore in the midterm within 5 years by strengthening the market position in India. As promised, I will be delivering the 500 crore India plan in the end of Q3 FY26. Over the few months, we have been actively developing our e-com platform, and we are targeting 50 crore revenue out of the 500 crore revenue from e-com business in the next 5 years. To achieve this goal, we are strengthening our partnership with e-com players and planning to focus on fast-moving product partnering with Q-com players also for faster delivery. In conclusion, Carysil stands at threshold of a transformative growth powered in next generation technology, innovative design, operational excellence, and unwavering commitment to the core values. We are going to double down our bet on India by strengthening and enhancing our domestic sales team to much greater heights as we see a growing demand of premium and luxury products in India. Now, I would like ask Mr. Anand Sharma to update you on the company's financial performance. Thank you. Over to you, Mr. Anand Sharma.
Thank you, sir. Good evening, everyone. Let me take you through the company consolidated financial performance. Sales volume, quartz zinc volume increased by 22% from 1.89 lakhs unit to 1.55 lakh unit to 1.89 lakh unit. Stainless steel zinc volume increased by 9.5% to 42,500 unit from last year 38,800 unit. Kitchen appliances, faucets, and other volume increased by 55% to 22,000 units from last year 14,000 units on YoY basis. Consolidated total income stood at 227.3 crore in Q1 FY26 as compared to 201.2 crore corresponding last year Q1, registering growth of 12.9%. EBITDA margin expanded by 112 basis points to 19.4% on YoY basis due to stabilization of raw material and freight costs, along with ongoing initiative to cost improve and increase capacity utilization. Profit after tax and monetary interest stood at 22.8 crore in Q1 FY26 as compared to 15.9 crore in Q1 FY25, registering growth of 43.4%. With this, I open the floor for question and answer. Over to you, operator.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditi Loharuka from CD Equisearch Private Limited. Please go ahead.
You're not able to hear her.
Hello, Ms. Aditi. I'll request you to join the queue back. So we will take the first question from Sanjay from Bastion Research. Please go ahead. Hello, Mr. Sanjay, your voice is not audible. Hello. I'll request you to join the queue back. The next question is from the line of Bala Murli Krishna from Oman Investment Advisors. Please go ahead.
Peter, some problem is with you because it cannot be that nobody can
Able to join.
Just allow me a moment. I'll check, sir.
Mandar, check karo, huh? What is happening?
Hello, Mr. Bala Krishna, can you please speak
Yeah.
on this? Hello.
Yeah.
Yes, sir. Please go ahead.
Yeah, can you hear me?
Yes, we can hear you.
Yeah. Yeah. Congratulations on the great stock numbers, Raji. So my first question is regarding this order from current USA supply to us.
Sir, I'm not able to understand you, sir. Hello, sir. Sir, we're not able to understand you. If you can speak slowly, please.
Yeah. Now is it okay?
Yes, but you will have to. I have a trouble to understanding the accent. You'll have to go a bit slow, please.
Okay. Okay, fine. So my first question is regarding this supply to current in US. So we won the big order and we are supposed to supply to 40,000 things in this year. So based on the current situation, the contract and everything is going on the right direction or any impact on this order? If you could explain that. Thank you.
Karen.
So like I stated, things are going absolutely well. On the contrary, the things are going better than what we had expected. I did also mention that the tariffs of Europe are also in place, and we're still in a great, on a great front seat. Our all products have been displayed at Lowe's all stores, so we are doing fine. We have discounts in prices, no knee-jerk reaction, no cancellation of the orders, so things are going absolutely smooth at this point of time, even after the 25% tariff in place. Thank you.
Okay. So my second question is regarding this, after having all this CapEx, realizing all this CapEx which you are putting on the quartz sinks and stainless sinks and faucets also. So what could be the revenue potential in the FY27 or FY28 from overall the company perspective?
Yeah, so we will come back to you on this, but with the CapEx, like we said, we are expanding the capacity to another 250,000 sinks. And so 250,000 sinks capacity can fetch revenue about 60 crores extra.
Okay.
Hello?
Hello.
Yes.
Bala.
Okay, that's all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Sanjay from Bastion Research. Please go ahead.
Hi, sir. Thank you for the opportunity. Is my voice audible?
Yes, now it's audible. Thank you.
Yeah, thank you. So my question would be, during the quarter, our gross profit margin has been declined by 70 basis points on YOY, and this is due to cost has been increased higher than the revenue. Can you please explain what led to high cost? As in the last call, we have mentioned that the cost pressure is easing off and we will see margin improvement. While you mentioned that the EBITDA margin has been improved, it is due to other operating expense and not due to raw material costs. So can you please explain me the raw material cost increase in our books?
So this raw material prices are now stabilizing, okay, and the costing comes on a weighted average basis, so impact will come further. Second, there is a product mix and geographic mix. So when we have a high weight our sink going to different territory, the cost will be higher. So it all depends on what type of contract and which country we are serving. Based on that product mix, the costing for gross margin may change.
It will vary quarter on quarter.
It can vary on quarter to quarter, but on the absolute side, the cost is decreasing and it's stabilizing at the point.
Thank you, sir, for the answer. So my question on the second front is, we are seeing strong growth in volume, while prices in steel sink and kitchen appliances are falling, and also, the quartz sink prices has been flat YOY. Any specific reason on what should we expect or what should we expect going forward on the prices terms?
So I don't know from where you got the data. Our appliances average prices has increased rather than the falling. So I have a data which suggests that average appliances pricing was 11,891, which increased to 12,912. Maybe because you have the data which combine appliances, faucet, and everything else. That's why the average value you are getting lower, but that's not the case.
Okay. And sir, since last quarter, we have mentioned that the EBITDA margin should range to closer to 20%. Is the guidance intact on the margin side?
Yeah, so we've been continuing that. What are EBITDA margin?
19.4.
Huh?
19.4.
19.4. So we stick to our margin guidance.
Sure, sir. Thank you. I will get back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Resham Mehta from Green Edge Wealth. Please go ahead.
Yeah, thank you. Congrats on a good set of numbers, and especially on the margin comeback. The first one is on the US business. So, just wanted to know that are there any quad sink manufacturing facilities in the US itself? And I'm not asking necessarily, the ones that have a European technology with them, but just basic quad sink manufacturing facilities are there locally in the US?
So when you're talking about the quad sink, what we are making, that there is no technology or manufacturing in the United States.
But the non-European or very local technology, mundane technology may be there, right?
So I would, yeah, but that's probably, like kind of it's a very, very crude technology to make something. So not premium things. Yeah.
And none of these retailers would actually prefer to buy those, right?
Again, I would say those are not typically a quartz composite sinks. They may contain quartz, but they are not as hardcore quartz sink what we do of high quality and with the resin what we use. So those are not preferred. That's a non-preferred sink in the US, not just in the US, but across the world.
So I was just trying to understand what is the risk, let's say, this 50%, this 50% tariff that is there, and nobody knows how this tariff is going to, evolve, right? But worst case, do these retailers then move to, some local technology from their sourcing standpoint, or, how does it work? Basically, that was what I was trying to understand.
Yeah. So I understand, obviously. See, first of all, I believe that 50% tariff has still not come. So there is a lot of speculation and there's a lot of panic reaction in the market by this. We are at a 25%. I'm very sure that both the countries are working very closely and they'll find an amicable solution. It is all about part of negotiation. Just have to get the best deal out, like we do it in the business. I am absolutely positive this thing will be solved. We just have to buy some time. That's point number one. Point number two, we also think, 25 tariff will come, what will happen? Nothing happened. 25 tariff comes, so what happens? Now, anyway, the inflation in the United States is going to kick in because the tariffs are not just from India across. So somewhere that buck will be passed on to the customer, right? So I think, like I said in my speech, with 25% tariff, our things are still much more competitive than Europe. That's one. Now, hypothetically, I'm saying, assuming that the 50% tariff comes also, right? So we have already planned a strategy A and strategy B with my customers that what next we have to do. Because we all know that this cannot go on for a long period of time, right? So somewhere, if suppose 50% tariff comes, somewhere we will bear, somewhere the customers will bear, and somewhere it will pass on to the end consumers. But what I said, Resha, was very critical. We will secure the US business. We will not let the US business go out of our hands and to our competitors. Our biggest competition is sitting in Canada, which is having probably 35% plus tariff. So we will find out a way out, which we have already strategized it, but that is too early to say what we are doing when there is still not a 50% tariff. So let the 50% tariff kick in, and then we will come out with the strategies of what company is going to do next. Now, it is not easy for someone with Lowe's, the biggest, second largest retail giant of 1,800 stores plus has already Carysil thing installed in their stores. You cannot take it out, you see. So, and the Lowe's team is coming to see our factory on October. They're very positive. I think overall that is very positive. Obviously, on the capital market side and most of the side is a panic situation. Kya hoga, ye hoga, wo hoga. But it's part of it's part of negotiation. We will come out stronger. We'll come out stronger.
Right. And, on this quad sink capacity, so just a clarification here. Today, we are at 75% utilization for our quad sinks. So, but this 75% is on the 10 lakh capacity, or we were to ramp it up to another 2.5 lakhs. So, the 75% utilization is on the 12.5 lakh quad sink capacity.
Okay, good question again. I think our capacity with the IKEA coming in, we would be reaching our peak capacity by October. As early as October. Our company will have to plan to expand to another 250,000 sinks very, very quickly. We're just waiting for what is coming out in the next 30 days time from IKEA side. And we need to understand that we have got about more than 75% of the global IKEA business. That's a massive business. It's a completely de-risking us from United States. Even if the worst case scenario, something goes wrong in United States, right, in the next 5 years' time. But we are not even planning. We have already de-risked ourselves by having this massive agreement with IKEA, and all is non-US business, right? So, keeping in mind right now, US is going as what it is, we'll have to still expand into 250,000 things extra. Because what's happening over the horizon, we have so much deals and traction coming in that we will need this minimum 250,000 things additional capacity to attract the customers who come to us. If we are bottomed out of the capacity, nobody's going to come to us. So it's a matter of time. In 30 days, we'll know what volume. We are expecting some quite large volumes from IKEA coming in very, very strongly. And I think in 30 days' time, we will come to know what we need to, how fast we need to add 250,000 things capacity. And I think by the next 30 days to 40 days, we'll also know what's happening between the tariff between India and US also.
Right. So basically, the 75% utilization is on the 10 lakh capacity. We have not yet
Yes.
reached 12 lakh.
Yeah,
Got it.
it's on a 10 lakh. Yeah.
Right. And the next one is on the UK business. So, with the FTA having been signed with UK, how, in what shape and form really, can it benefit us? And also a related question that Carysil products, can it start sourcing all of its, stainless steel sinks requirement from India with, we expanding our steel sink capacity? And how would that benefit the P&L?
Yeah. So right now, so good. I think actually you know a lot about our company. So, so I think the UK FTA deal, I think we consider ourselves as an Indian UK company only. We don't consider ourselves as an Indian UK company. So I don't think there's a big benefit on terms of the trade, but obviously there's a lot more confidence within the company, within the country. So that's kind of gives a lot of comfort level to do more and more business. That's point number one. Number two, we're already transferring almost 50% of the stainless steel business to us. And you remember, we said it enough, we need to expand in 250,000 things more. So that technology of the stainless steel thing, which we are not able to produce now for the UK, which we will take care in this new expansion. So
and that does benefit our P&L?
Yes. So my target to my UK team is that by 27, I think 100% of the business needs to be transferred. So obviously it's our company, so we can say what we say that's going to happen, but we need to come out with those quality things. And for that, we need to enhance our technology and the cost competitiveness. So the more volumes will grow, let's say we cross 500,000 things stainless steel, we will automatically get a price edge.
Understood. And on the last one on the Carysil surfaces, right? So, see, in FY25, which is the last financial year, here the revenue was largely flattish for Carysil surfaces. While, Carysil products being in same UK base, it grew its revenues by 29%. So, why this divergence in the growth trends of both these subsidiaries despite being based in the UK?
So the thing is, it caters to a very different segment of the customer. So where we have like a degrowth in the surfaces because they supply more to the retail store chains, and we need to be careful that if we are not getting our money secured, we do not supply. So while the demand is there, we need to secure our collection, receivables. So we do not take risk as far as the receivables are concerned. That's the reason, nothing else.
But do we see surfaces also to kind of get onto the growth trajectory in this financial year?
You see, my team is expanding very, very fast to the new customer. It is just a matter of time. Surfaces is going to bounce back. but it takes time by the time you go to the new customers. Because it's a factory. You get orders, fabrication, the turnaround time is 60, 90 days. But it'll happen. It is happening. The U.K. has bottomed out now. It cannot go worse than this. And I'm sure you will see some good news in quarter two. Thank you.
Right. And thank you. And lastly, just the domestic business has grown by 10% this quarter, which is a good sign to see. So what's driving this revival, and can we expect this continued growth momentum in the domestic business?
We continue, HM, our focus as premium products. Any company who has a branded focus on premium product is definitely going to grow. And our emphasis, like I said, on expanding our customer network product portfolio is only going to drive. Carysil has now become a premium household name in the kitchen category. I do understand where you're coming from, where we have seen a lot of other company results. And I always say, keep focus on premium products. That's where India is going to go in the future. And it's not just sales improving. There's a massive margin improvement also in domestic business. So we are going to continue this momentum in India in spite of there is a growing demand, but I think that's for the lower end of products. Thank you.
Thank you so much for answering all my questions, and all the best.
Thank you.
Thank you. A reminder to the participants, please press star and 1 to ask a question. The next question.
And our operator, please keep 2 minutes for a call, because otherwise everybody will not be able to get an opportunity to ask. Thank you.
Sure, sir. Sure. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Naman Parmar from Niveshaay Investments. Please go ahead.
Yeah, congratulations on a great set of numbers. Firstly, I wanted to understand on the domestic side, how much is the dealers and distributor has been added in the quarter one, and how much stores has been added?
See, we will give all this information on an annual basis, because every quarter is difficult for us to add, because there are few dealers getting added, few dealers we are not allowing them to operate at the low level. So it all gets churning, and we'll...
I'll just add it to it. I think our endeavor to add to 5,500 dealers by FY26 remains. We have already signed up 45 galleries. Remember, I said we're going to add about 100 galleries this year. We have already signed up 45 galleries in quarter one only. Our thrust is going to be more on opening galleries and experience centers in India, which would enhance the brand equity. As far as two is concerned, we are expanding our dealer network about 200 dealers a quarter. I think we are on track. I think we should be adding about more than 1,000 dealers by end of the year, which will take us to 5,000 plus end of the year.
Okay, understood. And secondly, on the right issue that is happening on the subsidiary company, the Carysil thing.
Yeah.
So out of the 9 crore investment that will be going, how much will be for the capex and how much will be for the working capital?
This is the right issue, where total capex will be around 30 crores in total. That is include land, building, and the machinery, which somebody has asked how much revenue. So at this capacity, we can generate about approximately 60 crore revenue. So approximately it could be 15 crores could be land and building, and 15 crores would be for molds and machinery.
Okay, understood. Yeah, thank you so much.
Yes.
Thank you. The next question is from the line of Pritesh from Lucky Investments. Please go ahead.
Yeah, hi. Sir, I just want to check, based on, whatever client volumes that you discussed, the capacity that you're talking about, the various RFQs that you're referring to or discussions that you're referring to across clients, if we sum total all this and let's say, the trade dynamics are realistic, world trade dynamics are realistic, let's say. So this 2.5 about 2.3 lakh volume that you did in Q1 26, which is 1,90,000 of quartz and about 40,000 of stainless steel zinc. This volume separately and maybe combined, this volume number 8 quarters from now should be what number that we can look at?
It is right.
Yes, sir.
Like I said that there are some large contracts we have signed, and IKEA is obviously one of the segments. And and like I said, we are very confident, starting Q3, we will be peaking our capacity. There is around 90-95% on the quartz side. So you're looking at almost optimizing the capacity in Q3. If that's what it goes, then like I said, 250,000 sinks of the capacity will have to add in. So I believe that by Q3 end, I think we should be peaking out on million. And we will have to let's say by March, April, we'll have to be ready with another 250,000 sinks additional capacity. That's one. So you're talking about a quartz capacity of 1.25 maybe by Q1 FY27. Okay. Now comes to the stainless steel sinks. I think somehow this China plus strategy, Europe plus is bringing down. Somewhere the people are getting a lot of confidence in us, and they want us that Carysil should also now start investing in the stainless steel and start becoming an important source for both quartz and the stainless steel sinks. So I think we are more and more things we make of new technology. We are very confident. So the RFQ has been done for a very large giant of 500,000 pieces. Even if we get 50% of that, 250,000 pieces, we're talking about 250 plus 250,000, which we have to be ready by Q2 of FY27. So by mid of FY27, in all probability, you will see a quartz sink capacity of 1.25 and a stainless steel capacity of 500,000 sinks.
Okay. My second question is, what is US, let's say in FY25 or Q1 as a percentage of our total business? So what is US contribution to the revenue?
So till Q2, it should be about 30% of our revenue. And moving forward by end of the year, I think should be 20%.
Okay. So, by virtue of the ramp-up, the supplies to non-US, all these clients and contracts that you're talking about.
Complete IKEA contract is a it's a non-US contract.
Non-US.
Completely.
Okay.
Some non-US. And hence, without doing anything, we'll be de-risking already, if something goes wrong in a worst case scenario. Yeah.
Okay. Done. In this ramp up from let's say 1 million capacity to 1.25 million, and let's say in zinc stainless steel from 0.25 to half, a lot of it is non-US, right? Or entirely is non-US?
No. So let us say US, I'll say 1.25 million. US could be about 20%, right?
Okay.
And maximum 20-25%. And stainless steel is completely non-US.
Which means even in quartz, a bulk of it is non-US only.
Yeah, because all the contracts of Howdens, IKEA is all completely non-US contracts, no?
Okay.
All right now traction, like I said in my speech, that overall the global momentum coming from across all the countries, which are all non-US.
Perfect. And my last question is, we can understand what is the risk now. So what I can figure out is risk is basically you have to still get the go-ahead on the 0.25 million in quartz, and you're still waiting for the go-ahead on the 0.25 million SS? That's how I should view it, or there is any other risk?
The risk क्या है? Risk क्या है इसमें? I don't think so कुछ risk है. The risk is only about if the additional 25% tariff comes and what the company should play its game now next one. So I think till the company is very confident by securing the business is the most important thing for the company. And I just came back from the US two days back, meeting the customer. They are so much in support of us. It's not that every customer in United States can, I've heard that some of my friends, they have stopped dispatches the next day only. You know what I'm saying? So somewhere the customers are ruthless, but we have such amazing partnership with our clients. They have so much trust in us. They're willing to support all, and same from us. We also willing to support that. So I believe we have built a tremendous and a very, very strong bond with the customers. They are also hopeful, and they hope that this tariff war is over. And like I said, that it is all matter of just time. It is just trying to get the best piece out of the deal. It's all about that. Yeah.
Perfect. Okay. Thank you very much.
The only risk would have been if the US customers say, "Oh, please stop dispatches," but that's not happening because the demand only is so much right now. And you answer your second question, what is happening in FY27? I believe in FY27, what Carysil is doing is very few companies have done it. We have awarded the contracts of all non-US business coming up now, right? That's one. The two is the inflation is going to kick in the US. The demand is going to slow down. And I think that's where the Carysil new contracts coming in with all the new non-US companies that's going to keep the company resilient and strong.
Okay.
Yeah.
Thank you very much, sir. Thank you, Chirag. Thank you.
Thank you. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Yash Naik from Kamakya Wealth Management Private Limited. Please go ahead.
Hello. Thank you for the opportunity. So you recently onboarded a key client in Dubai. So could you share more detail on the scale of this engagement, including the initial order or expected annual revenue run rate, and
Sorry, sir.
How this?
Sorry, sir. You have to go slow. I'm a little bit hard for me to understand you.
So you recently onboarded a client in Dubai, at the MR client in Dubai. So could you share the more detail on the scale of this engagement, including the initial order size or expected annual revenue run rate?
Yeah. So initially we have received a project order of the first MR, and we all know that MR belongs to the royal family, and 80% of the construction in Dubai is based on that. So I think right now we have about, if you took faucets and sinks, about more than 1,000 pieces to start with. So future we don't know. We don't know what's going to happen, but it's a big step. And the only thing we know that it only can grow from here. And we all know that MR is just not doing in Dubai. The MR is going across the Gulf. So anywhere MR goes, we'll have a lot of opportunities with that.
And another question is regarding your 50% target you mentioned earlier, that it's a revenue coming from India. So any timeline regarding that? From where? India, 500 target.
500 is in 5 years. Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Nikhil Rao from iThought PMS. Please go ahead.
Yeah. Am I audible?
Yes.
Yeah. So thanks for the opportunity. I have a couple of questions on the Turnhagen line. So in previous calls, management had mentioned plans to localize Turnhagen's products, and that there would be a 30-40% reduction in product prices. Could you please shed some light on how these efforts have progressed so far?
Sorry, I'm not able to understand it. Can you please come again? Loud and slow, please.
Okay. So, there was a mention of localizing Sternhagen's products in the previous call, and that there would be a 30-40% reduction in the product prices. So I just wanted to understand how those efforts have progressed.
This whole FK collection, Suzanne Khan collection, is all localized already. So you will see the margins have improved in the domestic market. Also, we have launched project series in Sternhagen to cater to large projects which are all cost competitive. So we are using all this sources from India now to source these products. Overall, there is a margin improvement on Sternhagen products, and by coming quarters, we are launching a lot of quarter three before Diwali. We are launching a lot of new innovative products in Sternhagen, which is going to eventually improve our margins.
Okay. And I believe we had targets to grow revenue to around $2 million USD. So are we still on track for that, or is there any update on that?
No, so we are on track. We are on track. Yeah.
Okay. Thank you. That's all from my side.
Thank you. The next question is from the line of Aditi Loharuka from CD Equisearch Private Limited. Please go ahead.
Sir, my question is, from which other countries do US import quartz steel sinks?
Sorry, what is it? Can you come again? What are the companies US imports?
Countries. From which other countries do US import quartz sinks?
So as far as we can only tell you what we know within what the news we have. So that's from Europe and from Canada. Mostly Germany, Italy, and Canada.
Okay. And how well is the company prepared for higher tariffs from European nations?
We are prepared with European tariffs.
European tariff. So trade deal already going on
with our US.
India, Europe.
India, Europe. So I mean, I think it's too early to say on the EU. If you're asking what is the India-Europe trade deal?
No. I'm asking if NATO imposes tariffs on India, then how well are we prepared to deal with it? Because a substantial portion of our revenue comes from European nations also.
So if Europe puts tariffs on us?
Yes, that's what she asked.
So Europe, I think it's very too early to say. Really, I don't want to speculate things right now. I don't want to speculate. Let it come. We'll see what we do at that time. All we know, to answer your question, we are having a tremendous cost competitive advantage. So even if tariff comes 15, 20%, whatever, I think we will still be, because you cannot ignore the fact Europe is facing tremendous high in inflation, cost of production right now. So it is very difficult for them to compete with us. We are the lowest cost producer zinc manufacturer in the world right now, as far as the shock technology things are concerned.
Okay, sir. That answers my question. Thank you.
Welcome.
Thank you. The next question is from the line of Gurmeet Singh from GSK Investment. Please go ahead.
Good afternoon. My question is on 2.5 lakh quartz zinc capacity expansion. What would be the capital expenditure and revenue potential of this 2.5 lakh quartz zinc?
125.
So if we add 250,000 zincs, the average price of a zinc is about 5,500. So that's how much is 250 into. So that should be about 140 crores.
37. Yeah. Okay. Thank you. That's it from me. And what would be the capital expenditure like?
CapEx should be around 30 to 40 crores. Yeah.
Okay. Thank you. Thanks a lot.
Thank you. The next question is from the line of Saumil Shah from Paras Investments. Please go ahead.
Hi, Chirag bhai. Congrats on a great set of numbers in such a challenging period. So I think most of my questions were answered. So just a data keeping question. This year, I think we were targeting revenues in excess of 925 crores. And I think first quarter itself, we did about 227 crores. So just wanted to know your outlook on the remaining quarters of this year. So how is our order book shaping up, and do you feel that we can even cross this guidance of 925 crore and maybe hit a four-figure mark this year?
I think it's very clear. Our capacity utilization is increasing on a quarter-on-quarter. We did a 225 number, with if we take even a capacity utilization of 5% a month, which is about 15% a quarter. I think our revenue share will obviously cost 250 crore a quarter. So I think if you take that rate, annual rate, we will be going at a 1,000 crore annual rate from quarter two.
Okay. Great to hear that.
So if that's the rate, then it already beats your 925, right?
Yeah, right. And to the previous participant, I think you said that Germany, Italy, and Canada, we have competitors. So just wanted to know, I mean, how much tariffs are they charged by US, these three countries?
So your EU is 15% and Canada is 35%.
Okay. So we don't see much of a challenge on our India 25% tariff as of now.
So I don't want to say what it is, my friend. Things are going on well. We are in good terms with the customers. The order booking coming in strong, good, right? So I think so far so good.
Okay. That's it from my side. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, we will take that as the last question. I now hand the conference over to the management for closing comments.
Thank you everyone for a great set of questions. Carysil has entered Q2 FY26 with strong growth momentum and robust product demand, clear roadmap to scale capacity and capture sustainable, profitable growth. With this, I thank you for all joining us today. We trust we have addressed your queries satisfactorily. Should you require any additional information or further clarifications about our performance or strategies, feel free to reach out to SGA team, our investor relations advisors. We appreciate your continued interest and support, and we look forward to engaging with you again in the coming quarters. Thank you. Have a great evening.
Thank you. Ladies and gentlemen, on behalf of Carysil Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.